Hello traders, this is Alex with the Commodity Matrix. It's June 15th, Monday at about 6:25 p.m. 2026. This is my X account, CBOTman33 is my handle. I update, try to update, keep all the stuff that we review today, plus anything new, some stocks, stuff like that. So anyway, you can go back and review, hook up my handle, CBOTman33. I'm going to do like I did last video. I'm going to split this up in two chunks. We're going to do the corn to the juice and then crude down to Bitcoin in a separate video. I'll probably cut them here, but that way, if you're not interested in the grains, then you don't, or ag, you don't have to listen to it. I will have a composite, where they do both, so you can kind of search for that. But let's get right into it here. Again, everything's short, man. Got to be a little careful. Nothing's long. Total, now that might be a low, right, if you're contrarian. It doesn't happen that often. Now, unlike the stocks, though, I have no opposites, right? I mean, so anyway, people are selling commods and buying the stocks, but, the stocks slipped a little. So, and Bitcoin has kind of slipped a little, and then now everything's on a potential rebound, and we'll get into that here. Let's go right ahead into the corn. And you can see this chart made a new low like we talked. Oh, it did not make a new low, but it got down there. I kind of like this setup if you're going to buy. I mean, you got a problem is you got a risk down here, probably to 420-ish. I assume it's always going to take that out. Might be a double bottom against the July contract. Again, we're in December. So now we're getting into the weather a little bit. So it's scarier than crap, in my opinion, to be short any grain commodity on its low in particular. Just because, right? I mean, it could all of a sudden be 120 degrees, scorching hot, and kill everything. So it's always best to be safety. Where do you think it's going to go, right? I mean, I just think it's, if it's going to downtrend, it'll downtrend in here, right? Now, again, it was a solar eclipse low right in here, and it was the midpoint, Gann's midpoint, 90 degrees from the solar eclipse, his projection point, and my 66 market day zone, that's what I use, it's called the matrix, but that did project that high, and down we went. So again, it might have to come down here to realistically and maybe trade sideways, and we'll look at that on the bar chart data. Here's the beans, and again, made another new low. Resistance, if you're wanting to be a seller, is not too far up, so not a bad trade, up around 1160, at around 1156-ish. Again, it might go up a notch or two, but if it's really a dog, it's up against these old lows. I got to assume if it's going to be a bad, ugly pig, 1156 on the nub, maybe 1155 and 3/4 might not quite get there if it is truly a full out bear. Now, if you bought this on this dip, which ain't a bad buy, right? I just don't think you can risk much more. At the most, 1105 and 3/4, or buy some $11 puts against it or something and hang on for a bit. Now, July's only have, I don't know, week or so left, and then you got to roll them to August or before deliveries, right? Now, if you don't care about deliveries. Here's the D suite that we're trading. Again, the Gann zone was the high, right in there. Had a kind of a fade close. So again, the stops did get moved down a little bit. At least they're a little more human. I mean, we sold it down here, so we're definitely, it's not a low risk trade, 50 freaking cents, but that's all you can do, right? Now again, I wouldn't trade it like that personally, but again, that's why the mechanical methods like this that I use, or what Gann used, right? He used a 2-day trendline indicator. That's why his trades were always in the hunt. Now again, he would have been looking for a high, I assume, because of the low that we had down here in the solar, right? So Gann would have been out and maybe doubled out, right? But I doubt it. Now again, he would have been trading on some type of number, maybe on the master chart or the square 9, something, right? He could have had some number up here that he got out on, or some stuff that he always put out. Now again, he traded the 2-day trendline indicator though to get him in, and tendency to get him out as well. Here's the meal, just a pooch. I mean, July got up here, so we had a double top in the July contract. I don't know what the DSI was. I guess I don't have it. Just a pooch. Got to assume it's going to go back down to the lows. Now, we didn't make a new high, so it doesn't have to make a new low for Newton's third law, right? For every action is equal but opposite reaction. The equal reaction would be, again, some type of another low right down on it. Here's the cough. Did not make a new low this moon period. Now, this next moon period is very shortened, by the way. This one, June 5th. So it only has till Friday, because June 21st is a Sunday. So it's only 4 days long, so it's really shortened, just so you note that in your memory banks, which makes, again, these last two bars, has a little more data, but it didn't really do much, right? Here's the cotton. Again, we are now short. We did lower the stops from way up here down to here, a little more human. But again, I wouldn't be trading it like that personally. But that's the mechanical method. That's where we put our stop. Um, I think it's going to break back in here, probably whatever 70% is or 65, something down in there. 62 if you want to use 61 point if you're going to use like Fibonacci retracements or something. Here's sugar kind of in that coil, still made another new low. I kind of like this, right? You can see the rhythm here from low to low. That's 9 to 10 bars. And this one's 9 bars from here, right? So again, the rhythm's in. I wouldn't be afraid to maybe click on an hourly chart and go with the direction of a buy on a buy area. However you trade, right? I would use a 2-bar indicator like Gann would do on an hourly, or something a little faster maybe. So just, or use an option, right? You can buy sugar options dirt cheap. Now we're trading March of 2027. I like that March contracts. I stay in March. They have a lot of volume. They don't catch the big dingers, but you also don't get hammered in the trades either. Here's the juice, kind of caught in that decline. It had a chance and then fizzled out. We closed lower here for the moon period. Just, we get a couple closes at the same level and then down to a new level. So I assume that's the case. I'm expecting it to challenge this January move down here. Now we are in the spot. We are trading the spot. I have a hard time trading the spot chart on juice. I'd be scared of deliveries, but November doesn't have any activity. Here is. Okay, this is the Dees corn bar chart data, the free stuff. And again, we got down here. We talked about corn plopping out this low. So we do have the trap, right? We had the bull trap up here. Now we have a bear trap. I would have been buying this, and you still could buy it, right? Or if you want to wait for the 2-day trend line indicator, or at least a 1-day, right, would be right here. We had 1 bar up, maybe 2. Let me see, 451.5. No, it matched the high. But again, if you're waiting and gonna have some patience, you could put a buy stop here at 452 and just play it that way. Or again, you could buy it here with maybe a put. If you're kind of neutral to bearish, you could buy it here with maybe 1 futures and 2 puts. All right, that kind of play. Now, if this is the pivot, that's a nice pivot. Again, that is, can't read it. That was 84 bars, 83 bars, and up, let's say 14%. So again, this would be the doubler, which would be around 568, not percentage-wise, right, but just the doubling of this range. So you're looking at around 570-ish, and the time frame is around September 8th. Just a simple format, similar to what we did on the Bitcoin. So again, I think quantity over quality makes sense on both those Bitcoin and corn here, right? You can buy now the money calls. This is December, so that'd be plenty. You buy all the money calls, maybe 520. Don't do any good if you don't make a high. Let's say you buy 5. Let's say you buy 6. You get out of 3 when you double your money plus commission, and then you keep 3. You keep 3 for down the road a bit. If the actual futures make a new high quickly, then you can scale out of the other ones for a pretty good profit and keep 1 to be a greedy SOB. Again, quantity over quality. It's a suck hole, so true gamble. It could get up to here though, and you could get out, of half of your positions just because of the volatility. Right? Here's the beans, and there's always reports too to cause some action. Trying to buy and all. Here's the soybeans. You can see we're still caught in that parallelness. And if you draw in the actual angles, that's 120. That's a good Gann number. 121. We're rounding, of course. And then this would be the other part of the parallel. So again, makes sense that was a low. I kind of liked it. I think you could buy it anywhere. You could even buy it down here and risk a little. No place to sell it really. So the only play is to play around to the long side with very low risk or options, that kind of thing. Let's go on. Here's the wheat. It did pop a new low. Kind of broke out of this continuational pattern. Again, this was the zone, the Gann zone, the 6th matrix zone, had a trap. So, and now we did kind of have a small trap here. Of course, the logical trap would be down here. Didn't have to do that since we knocked that one out. The solar eclipses are down here for support. Again, as I mentioned in the past videos, I don't like buying wheat until we're halfway through all the harvest of the wheat. Here's the meal, popped a new low, but not a low low, just a chopper low. So not a bad buy, right? Again, there's no way to sell it. So just a putrid thing. I mean, it's definitely on the bottom side of its. Again, this thing trades out to 2020. Looks like there was some activity back in 2023, so it's definitely on the low side. You just got to assume it's going to trickle out lows and keep doing it over and over and over again. Here's the cough. We did have a dead cat bounce. We talked about that a little bit last video. Still caught in the in the in the down channel. Again, the parallel part even. So kind of nice low, right? I mean, if you're a picker, it wouldn't have been a bad. And if you did buy it down here, you almost got to sell it out here and not expect it to have some big gap and go. Now it could, right? I'm just saying the trend is definitely down. So you're true gambling here. The smart money, if you have multiple contracts, sure, you can get out of one or two. If you get out of half of them, right, and then play the other for a bigger bounce and then put a break-even stop in, that kind of thing. Here's the cotton, the bull. Only bull we really had besides silver and gold and I guess cattle. But you can see we're retraced down. This is the cotton, the Dees contract. Let's take a look at a spot real quick. That's a spot nearby just to see what it looks like. It kind of looks similar, right? I mean, the end result never gave you another opportunity to sell. So be a little careful. I'm not saying that's going to be the case, right? But it's proven it again here. It did have a secondary pop, and this one had a little secondary pop, but we're already past that. So the end result was a pretty good lick. Again, this is kind of out of our, it's too far to, and let's draw one more in for this one. We'll just draw it down to there. Two different, same color, but they're obviously far apart. And that's the target. Wow. Oof. Well, this first one's, or this quicker one's definitely in the target zone. And this one would definitely get down to this low. So it's definitely possible. Again, we got to have some finale. I don't know if you're a 5-wave guy or not, but you know, 1, 2, 3, 4, 5 makes sense that we could have one more plunder. Let's go to sugar again. Oh, that's the nearby. Let's go to daily. Again, that was our projections from the last video. Again, just a sad sack. It just keeps creeping. I like this. Buying these though, if you get some timing, you know, the cycles of that make sense a little bit. These from low to high to low to high. You can find some rhythmic trading and pretty cheap trading risks, right? Which is half the battle. Let's go to the spot nearby. Again, just a chopper on the juice. The crude, we're in September, and you can see the July is in, right? So we rolled it right in here somewhere. We are short, got stopped out here again with our 3-bar method, right? Here's your 3 bars, and we got stopped out finally here, or in, right? We were long, double out, went short. So now the last time we got short down in here was the low. So you know, I got to assume that's a possibility. It looks pretty ugly chopper wise. Well, since we rolled it, I didn't go to August. I stayed in Sep because I hate rolling it every freaking month. Another one you don't want to get caught deliveries on. You can see though, we're coming into some type of Gann support. It's a 1-to-1. So, and if you had to stretch it far as it could go this next week, or actually this week, again, it ends Friday. But if you're looking to pick something, pick a bottom, 73.96 it has to hit that line on my chart. Now it could go to 7, it could go all the way down to 73.12 or 13, excuse me, and still hit that line and not break it, right? So do your homework, find the number, and you could also buy it here and then maybe risk down here too somewhere. Here's the nat gas. Did push our stops down. Got a little profit zone in here. Again, not the time of the year to go long in any heavy level. Here is the E-mini S&P. Again, we did go short, which didn't really care for, but our stops over the highs, so not a low risk trade. The solar eclipse, if you're looking to buy a big ass dip, you'll see one of those weird anomalies that occur in the S&P, which we all have seen. But that old solar eclipse is 69, we'll call it 31. That'd be a great area. And you might want to put on a daily chart to see where that's at basis, because that was June. Might want to find out what the SEP is on that solar eclipse date of February 17th. And if I remember, I'll look. But anyway, that would be, again, you always get those weird anomalies, right? Something happens, boom, it goes down, and fear, panic, and that's it. Here's the euro, again, slop, but tradable, right? No big heavy risk. You can see the rhythmic from low to low. I think, again, it makes sense that we're looking out here in the future a little bit. This was 90 degrees over. Again, this is Euro FX, not the euro dollar like the old euro dollar. The TED spread. Anyway, this is the gold. It did make a new low, which we talked about. Our stops did get moved down. It had a pretty firm close, but it still closed lower. So it's not out of the woods yet. If you did pick this bottom, I would assume you try to take profits up here where I'm going to get stopped out. Makes sense a little bit into the Cardinal Cross area here. Or if you're really more bullish than that, really you could get up to here maybe. Or on a big punch, get up to the solar eclipse close basis December, which is 50.44. Now again, you could go to the daily chart and get the actual number if you're trying to be precise. Let's go to the silver. Silver did not make a new low, just kind of caught in the quagmire. Now again, this is July, rolled the D's. D swings up here. It did get the stop, did get pulled down, still at a loss. Pretty sloppy margins. I don't know what they are. I'm assuming they're still pretty high. Solar, if you're wanting to sell, solar eclipse is around that 75.84-ish. Call it maybe 75.80, rounding down a bit. And maybe again, look at the actual D silver chart to get the DC number instead of the July. Anyway, that's kind of the area, right? Or maybe sell it where I get stopped out. Makes a little sense too, on some type of quagmire rally. Here's the downtrend line, which is a 1 by 1, right? And the Cardinal Cross. So not a bad area to pick around to at selling it. If you did buy this low, not a bad area up there around 84.75-ish. Well, let's go in the middle around 83.55 or something. Here's the cattle. Just kind of an outside event last moon period, an inside event. We had 3 closes at the same level. Now we closed higher, but it did not make a higher high. So the stop did get moved down at a more manageable level. The solar eclipse closes right in here. So kind of right on it, right? So pretty tough to just blatantly buy the cattle here. You might as well buy it where I get stopped in, out and in, right, on a double out stop. Now, last but not least is Bitcoin. Then we'll go to we did have a double bottom, and we did close higher for this moon period. So the stops got moved down a smidge. We're still at a loss. This is where we sold it. The stops are right here, right? So this big call again, like I did here. This is the money bar. This is the money bar here. Just and you can see what we did. You can go back and look here. Here's kind of the money bars. We'll cheat a little bit. Just slowly traded within them, and then poof. Here's the money bar here. Actually, these two are kind of the money bars, and then it traded within it, and then poof. So again, that's the tendency. If this is a low, we'll probably go up here, and probably where near my stop is, or maybe where I get stopped out next week, if I get stopped out, and then poosh. Again, that's kind of the tendency, right? So again, until the low is confirmed, we don't know anything. We're down 50% down to these levels, right? So pretty ugly stick. We'll look at the dailies to confirm. We are the 90-degree over from the low was the high. And 225 was the other high. So again, the Gann zones on your Gann wheels are being pretty active. Oh yeah, I did right. I did calculate this swing, right? If we do this exact same swing but double it, which is the tendency if this is a low, right? And this is the pivot. This was 22 bars by 13 bars. Right, 22 up by 13 over. Now you double that would be the target mathematically, which happens to be the lunar eclipse. And again, that'd be 44 bars by 28, right? Doubling this, keeping the same speed, right? If you draw a line from that low, it'll match up to here, right? So that'll be your red dot at the barrel of the gun. That'll be your first target. If it's a really whipsaw action, that's also the lunar eclipse. I like that target. I don't know how you trade out of the money options on Bitcoin. I used Coinbase when I was doing the stock matrix last year, and it worked okay. It wasn't exact, but I think you got to go hunting a little bit for something, and it makes sense, right? We had a solar eclipse low pretty much, and the Gann 90-degree zone, my 66 matrix zone, was a high, and now potentially lunar eclipse. I would fade it into the solar, right? But that target does make sense up here quite a bit, actually. I haven't done a whole lot of homework on that. It's just something simple, but it matches up. All right, I'm going to put you on pause here while I load up the bar chart charts. This is the crude on the spot, kind of still in the money swing. Let's go to the December now, which is the one we're trading, which has a little different look. Broke the uptrend line, broke a swing with a gap. Uncovered close, though, a couple of them. Again, crude, pretty notorious to see this crude get down back into the 60s. A little different than some other commodities. You get up too high for too long, and you get some abandoned wells kicked on, and people start producing a lot of crude pretty quickly because it makes financial sense to do it at these price levels. Now, you almost got to look at the Kansas cash and Oklahoma cash crude sweet to see what the levels are actually at. Here is the nat gas, kind of a nice little pivot here. If it breaks or not, don't matter. Here's the S&P, again, had a little drop down. Again, to have a correction, it has to break shit. This had a trend line up here, and guess what? It broke it. So, we had a swing down, not very much, but it's all we had is a 2-bar swing down, and it broke it, right? So that's a true correction when you break stuff, and it is the first correction we've had since the actual low. So this is leg 1, leg 2. Wow, pretty impressive in my opinion. So be a little cautious. Just be willy-nilly short here. Use puts, pretty cheap, I'm assuming. Here's the euro, not much to say. Here's the gold, again, another new low. You can kind of see the rhythm here. Let's just run it down. Oops, didn't get it right. That was 37 bars on a daily. 36. All right, let's run it out. Oh, that ain't what I wanted. Oh well, let me just run it from this low. Kind of 36 bars. 37, 38 from this high, right? So again, obviously I could see it just by looking at it. Of course, trading for so long, you kind of see shit. Don't even need to have a AI to tell you, right? But this break, correction, this break, correction. So it's logical that if we're still caught in the quagmire, we'll have a 19-day back rally. And if it's exact, which it won't be, we kind of go back up to here around 49. And you got to be a little careful, right? This is the solar eclipse. I think you're going to be, definitely some stops are going to get rung there if we do have that motion. There's a downtrend line here, right, too. So I don't know. I guess I'm bearish, gold and silver both, actually. Here's the silver, just a chopper. Margins now, back in here I said margins are way too cheap. 66 grand were not enough. Then they slid back to 44,000. I don't know what they're at now, but probably too high in this environmental trading. But you never know when all of a sudden you get one of these days. Here is the cattle. Again, making new contract highs about every quarter. So pretty tough to be short there unless you're hedging, then you should be short. Here's the Bitcoin. That's the August chart that I'm trading. Here's the actual nearby, which will make a little more sense. And you can see this little bounce up here. We had a pretty good bounce, but it's kind of in the zone, right? We did make a trap. So I talked about that. I wouldn't mind buying that. Makes sense a little bit to me. But it needs to get going. I don't know. This open close never did cover. So I'm just kind of caught in a quagmire, but people that are cost averaging down, all these 50% level, this is 52, but 50% level made sense. This new low makes sense if you're cost averaging. And if you never get out, right now, I don't trade that way. I'm waiting for a bigger plunder. This first zone high was July 14th. So I think that'll be an annular that I'm waiting for. That's the first out of the 3, right? The final finale was made October 6th, which is a great area from the stock market history. So, all right, I'm going to sign off. Again, I hope everyone has a great week. Be a little cautious here. We're on that bear market pop. Now, again, as a contrarian, you definitely want to maybe do the opposite a little bit, I think, because I haven't seen where all the commodities were short that much forever. I can't remember. Usually the S&P is long or something's long, right? So everything was short. So now in the stock market, you can have faders, where people get out of the high quality stocks and buy Coke and utilities, right? There's safe play. So, all right, I'm going to sign off. I'll sign off, and everybody have a great rest of your trading week.